Good morning, everyone. Good morning, trade pros. Good morning, YouTube. Hope everyone's having a great start to the week. It is Monday, February 6th. As we wrapped up January last week, we wrapped up the non-farm payrolls, which came out on Friday. And we wrapped up a lot, realistically, in this market with this last pretty strong bull run. We wrapped up the Fed last week as well on February 1st. And there's a few things that we do want to talk about today in terms of the China-US tensions, also the Fed, and some more tech layoffs that have come from other companies. Now, first and foremost, you may have heard this all over the news. There was a quote unquote Chinese spy balloon that was circulating over the weekend with Secretary Anthony Blinken canceling a top level meeting with President Xi Jinping, citing violations of U.S. sovereignty. So an American F-22 Raptor fighter jet shot down this Chinese spy balloon over this weekend. And in response, Beijing called the use of force a violation of international conventions and warned that serious repercussions, insisting that its civilian unmanned airship was merely collecting meteorological data and strayed off course due to high winds. So, a very interesting, I would say, excuse in that regard with what had happened. And the U.S. had recently attempted to get relations back on track following a tension-filled visit to Taiwan by former House Speaker Nancy Pelosi in the summer, and Treasury Secretary Janet Yellen also held discussions with her Chinese counterpart Li He at the World Economic Forum in Davos, while President Biden met Xi Jinping in Bali during the G20 summit in November. So frictions between the two world's largest economies already lingers over areas like trade, but bigger economic risks are at stake with the battle over access to key cutting-edge technologies. So if things continue to escalate, it could lead to a new longer term crisis, which is just adding to the overall global economic downdrift that we've been seeing over the past few months now. And reports have surfaced that China has previously sent a high altitude surveillance balloon over the US that was undetected, while Beijing's ties to Russia during the Ukraine war are under the microscope. So, other policies against China could also be taken as public opinion shifts towards a more unified voice. So, in January, both Democrats and Republicans voted overwhelmingly to establish the House Select Committee on a strategic competition between the U.S. and China Communist Party. So, we'll see how this kind of continues and kind of how it breaks down realistically. There hasn't really been an effect on the market based on what is going on there just yet, but there are tensions that have continued to escalate, and we're going to see how that shapes up in the coming um, weeks, if you will. So we also had non-farm payrolls on Friday, which an astounding number, 193,000 expected jobs added in the month of January. And to our surprise, with the adjusted numbers, 517,000 jobs were added, right? Massive blow with the unemployment rate hitting its lowest mark since 1969. Now, the majority of Americans have seen their budget squeezed last year. In fact, at the end of 2022, about 64% of the U.S. consumers were living paycheck to paycheck. That's a very large number, up from the 61% a year before that. So, according to a recent study by Payments.com and Lending Club, that means that 9.3 million more Americans are living paycheck to paycheck. And what's even more alarming is that 86% of them earned more than $100,000 annually. So, underscoring the heightened scale of surge in the cost of living, um, we've seen that these numbers may not be as representative necessarily of the overall labor market as one might have seen. Now, we had a pretty strong uh, drop and pop in that whole news report, right? Of course, 517,000 jobs added was there are some adjustments. I don't think that's a generally very real number considering over the past few months, maybe even year, we've seen an average of maybe 200 jobs added in prior months. So it's something to take into consideration as well. So one of the last things that I do want to talk about before we look at some levels here is tech is continuing its layoffs. So, how necessarily strong is this labor market? Due to the decline in demand for personal computers, Dell is laying off around 6,650 employees, which will impact 5% of its global workforce. So, we've navigated economic downturns before and we've emerged stronger, said co COO Jeff Clark. And he said we will be ready when the markets rebound. Now, Device shipments, including PCs, took a hit in 2022, with Dell seeing the largest decline, and a further downfall is expected in 2023. So the news comes at a time where most tech companies are naturally cutting costs by slashing headcounts in this current macro environment. So HP also recently announced a lot of layoffs. Now, coming into Monday, we have a lot of Fed speakers this week. Let me just pull up some other numbers. What do we got here? When are these Fed speakers? We have Jerome Powell coming in on Tuesday to speak at the Economic Club of Washington. We have Fed Vice Chair Michael Barr speaking on Tuesday as well at 2 p.m. We also have Fed Governor Lisa Cook speaking. We have New York Fed President John Williams speaking on Wednesday. We have on Wednesday again Fed Vice Chair Michael Barr and Atlanta Fed President Raphael Bostic are speaking, and Fed Governor Christopher Waller is also speaking on Wednesday. On Thursday, we have Christopher Waller again, and we have the Fed budget balance. We also have the Fed President Patrick Harker speaking as well. So that's on Friday. So massive lineup of Fed speakers this week. So you're going to have to keep that in mind, have a news source handy somewhere, because yes, they can move the markets. They can shake up the markets based on what they say, right? Their economic outlook, projections, so on and so forth. So right now in the S&P 500, we're trading at we're trading at 4119, based on what I'm seeing right now, 4119 trading around that area, 4120. So what we're looking at here is, I was mentioning some things on Discord, on our Twitter, whatever, wherever you guys have access to us last night. 4141 was a huge key area that I was expecting to hold out resistance, and we got a strong move, multiple tests of that area from 4101 down to 4106 region before we got a bounce that rose up to the 4125s. Now 4105 to 4107, that's a huge distribution low where I was expecting to meet some buyers. No fills for me this morning. It kind of just started without me. I couldn't get a decent fill that I wanted to, but upside held from that area as we were expecting to kind of hold within this distribution. And now as it stands, I'm going to be watching 4125 very closely and seeing what may happen. If we move above that 4141, realistically, we're going to see the top of the distribution, 4160. I think we're due for some kind of a pullback, come back into the 4090-93 region, see how the bulls react there, because it's the top of a distribution block. And I think that some buyers are going to try to hold that region out. If not, we slip lower and we could have a 60-point move under that 4093. So with that being said, I hope everyone enjoyed the update, has a great first trading day. Let's start off small. Let's see what we get in the market and keep those levels in mind. So we'll be back tomorrow, and I hope everyone checks us out at TRADEPROacademy.com for the free set of our membership. So see you there, and chat soon.